Hi everyone. Let's take a look at problem 11-4A, which deals with payroll expenses, withholdings, and taxes. We're looking at the Paloma Company, and it pays its employees weekly, and its employees' gross pay is subject to the taxes that you see in this table to the left of my mouse. So 6.2% FICA for Social Securities up to the first $94,200. And Medicare 1.45, and there's no limit on the Medicare portion. Federal unemployment taxes, or FUTA, 0.8% on the first $7,000, and state unemployment taxes, or SUTA, 2.15% on the first $7,000 as well. All right, the company is preparing its payroll calculations for the week ended August 25th. Payroll records show the following information for the company's 4 employees. Okay, so the gross pay through the 18th shows that Delia has $93,400. Maybe it's Dyla. I'm not sure how to pronounce that name. Trey's got $31,007. Keisha $6,850, and Chi $1,250. And there we see the weekly gross pays and how much income tax is withheld. All right, in addition to gross pay, the company must pay 1/2 of the $34 per employee weekly health insurance, and the employee pays the other half. The company also contributes an extra 8% of each employee's gross pay at no cost to the employees to a pension fund. All right, then we're asked to do the following. First is compute the following week ended August 25th amounts, and on the first requirement, it's to compute each employee's FICA withholding tax for Social Security. Okay, and in the interest of saving time, the calculations are all basic multiplication and addition. So rather than taking the time to type it out, I've gone ahead and put the published solutions, and we'll just explain them as we go. Okay, so let me slide down a little bit. All right, so to lay out FICA, the way to approach this is to put the names, let me sort of show all of this. We'll bring it all the way down. I think that's it for FICA. Okay, so if we list the employees in columns right below my mouse here, we would indicate the maximum base is the calculation for all, which was $94,200. Then the amount earned through 8/18. If we subtract the amount earned from the maximum base, we come up with the weekly amount that would be subject to the tax. Now, the beauty of doing that is that it shows you that in Delia's case, we only have $800 to go. Okay, even though she earned $2,800, we only will pay tax on the $800. So 800 times 6.2% is $4,960. And we go through the same calculations on everyone else's. So we're really comparing, like in the case of Trey, what he earned versus what's subject to tax. And only Delia had a case where she had achieved the max. Everyone else, the full amount of their pay would be taxed at the 6.2% to compute the FICA portion for Social Security. All right, let's slide a little bit more and see how do we do the calculation for Medicare. And that's pretty straightforward. You take the gross amount of pay, there's no limit, right? The 28, 1,550, or 500, we write those numbers again, times 1.45%. Multiply it times each person, you come up with the Medicare tax. All right, part 3, I'm going to slide back up and just read to the left of my mouse here, says compute the employee's FICA tax for Social Security. All right, let's slide on down. All right, so to compute the amount for Social Security, we would take the $4,960 that we calculated for the Social Security tax and jot it down. Now, with the important point here is we did the employee's FICA first, but it's an equal match. So whatever the employee's FICA portion was gets shared with the employer as well. Okay, so the employee just pays, the 6.2%. So does the employer. There's a matching going on, which is why self-employed individuals wind up paying double the amount. They pay both the employee and the employer if they're taking wages as a sole proprietor. Actually, if they're recording income as a sole proprietor, there's a little bit more complications and some other rules if you actually if you actually pay yourself through your own business. We'll save that for another time. All right, what do we calculate next? We calculate the employer's FICA taxes for Medicare. And again, this should be pretty straightforward. It's an exact same match of what you had for Part 2. So take the $40.60 from there, drop it in. Again, it's shared equally. So $70.33 paid by the employee, $70.33 paid by the employer. All right, 5 says compute the employer's federal unemployment taxes. Now this time it's only the employer that pays. All right, so how do we calculate that? Let's head on down here. What we do is we take the maximum base and then we subtract the amount that was earned through 818. If we've exceeded the maximum base, then there's no tax to be paid. So in the case of Delia and Trey, there's no taxes to be paid. But Keisha's only made $6,850, so another $150 is subject to the tax. And Chi is only made $1,250, so there's $5,750 that gets subject to that tax. Okay, so we pay the amount subject to the tax times what that tax rate is. Actually, it's not the subject that would be earned to the tax. We have to do a comparison of what was the amount subject to tax versus what were the earnings, and it's the lesser of the two amounts, which is why Keisha only gets $150 and she only gets $500, right? It's the lesser between those two amounts. Multiply it times 0.8%, the tax rate, and you calculate the employer's portion of the federal unemployment taxes. Of course, you add going across for all your employees. Okay, next we do the state unemployment taxes. And the state unemployment taxes is the same kind of calculation. Actually, we take from number 5. We already know the subject to tax. It's the exact same 7,000 limit, so we can rely on this calculation from this row to the right of my mouse through here, and then multiply it times the tax rate of 2.15%. Okay? Part 7 says compute the employee's take-home. So now what you have is a bunch of items that you need to subtract to come up with take-home pay. Okay, we take the gross earnings, then you only subtract out the employee's portion, which would be the employee's FICA. That would be to the right of my mouse, that row. The employee's Medicare, only the employee's portion. The withholding taxes, and we got that from the table way at the top. And the health insurance, which is 1/2 of the $34 per week. And if you subtract all those items, you come up with the gross earnings. Now, let's just go up and show that the withholding taxes did match up top. So 284, 145, 39, and 30. Slide with me. And sure enough, there's the 284, 145, 39, and 30 to the left of my mouse. Okay, now let's take a look at number 8, which asks us the employer's total payroll-related expense for the employee. Okay, so if we, let me get this on the screen. The way we could compute that is we take the gross earnings, okay, and take it per individual. Then we have to add in the employer's portion of the FICA Social Security taxes, add in the employer's portion of the FICA Medicare taxes. Now we've calculated these above. Then add in any federal unemployment tax and state unemployment tax that the employer paid, right? Add in the 1/2 of the $34 per person per week health insurance. And also the employer had that 8% pension contribution, which is 8% of their gross earnings. So you would have to take 8% times the gross earnings, add that in, then add all of those together, and you come up with the total payroll expense. And of course, once you compute it by individual, you just add it going across. And that takes care of everything that we were required to do on this problem. Okay, thanks everybody.